Good morning and welcome to AM Forex New York. Today is Tuesday, October 30th. I'm Caitlin Sisney. The pound rose to a 26-year high against the dollar on speculation the Bank of England will keep interest rates at a 6-year high, while the Federal Reserve cuts borrowing costs tomorrow. Sterling is trading at 206.56. Meanwhile, the dollar is relatively steady above yesterday's all-time record low against the euro. Euro is trading at 143.93. Meanwhile, yen is trading at 114.64. Today we're joined by David Gilmore from FXA. He explains why he's negative on the dollar.
Good morning. I'm still quite negative on the U.S. dollar. The Fed is going to cut rates this week, despite new uncertainty that Greg Ip of the Wall Street Journal put into play, suggesting the Fed is maybe closer to not moving on rates than cutting again. But I think the case is pretty compelling. The train wreck from the credit markets is still yet to be cleaned up, and the housing market in the U.S. is slowing very dramatically and impacting the consumer. Indeed, I think the Fed has a lot more cuts ahead to avoid a recession. So that's the main theme for keeping the dollar weak. And then I'd like to look at commodity prices. The trend there is higher. In part, there's a feedback loop through the weak dollar, and that should support the Aussie and the Canada, both at multi-decade highs. And then on the ECB front, inflation's still a problem. German data for October, a bit worrisome, holding around 2.4%. I think the ECB can't give up the inflation fight just yet to kind of take any of the pressure off of the euro. So I like the euro, don't like the dollar, and I'm sticking with that story. Thank you.
That was David Gilmore from FXA. I'm Caitlin Sisney. Join us again later for another update right here on ForexTV.com.